quarterly estimated taxes are the obligation that catches every first-year self-employed coach off guard, and the cost of getting them wrong is small in penalties, but enormous in April surprise. W-2 employees have taxes withheld every paycheck. They never see the money, so they never have to discipline themselves to set it aside. You don't have that automation. You send the IRS 4 payments a year on 4 deadlines that are not evenly spaced, and you set the percentage aside yourself. This video walks the 4 deadlines, the 2 calculation methods, and the payment mechanism that makes the actual payment a 5-minute task. W-2 employees have withholding. You don't. That sentence is the whole pivot in how taxes work for you now, and it takes most coaches a full tax year to internalize. As an employee, federal income tax, Social Security, Medicare, and state income tax all came out of every paycheck before the money hit your account. You never wrote a check to the IRS. As a self-employed coach, none of that withholding happens automatically. You owe the same taxes. The IRS lets you settle them in 4 installments through the year rather than one lump in April. Miss them or undershoot them, and a small underpayment penalty gets tacked onto the April bill. Avoidable in full. 4 federal deadlines, and the second one is the trap because it's not 3 months after the first. April 15th covers January through March, 3 months. June 15th covers April and May, 2 months. September 15th covers June through August, 3 months. January 15th of the following year covers September through December, 4 months. The uneven spacing catches coaches who set up a quarterly calendar reminder on a 3-month interval. They miss the June deadline because their calendar marks it as July. The IRS doesn't shift deadlines for convenience. Verify the actual dates against the current year's Form 1040 ES because weekend and holiday shifts move them to the next business day. 2 methods for computing each payment, and which one fits depends on whether your income is predictable. Actual income method. Estimate your income for the period. Apply your expected tax rate. Pay on that basis. Precise. Adjusts in period as income comes in. Requires tracking income across the quarter and recomputing each time. Best for coaches with stable, predictable monthly revenue. Safe harbor method. Pay based on last year's total federal tax liability divided by 4. Regardless of what's happening in the current year. No in-period tracking. Locks in penalty protection. Best for coaches with lumpy income or who don't want to recompute 4 times a year. Unit 11.4.2 covers safe harbor in depth. IRS Direct Pay is the payment mechanism. Free, direct from your bank, no third party, 5 minutes. Go to irs.gov Payments, select Direct Pay, enter your bank routing and account numbers, select Estimated Tax Payment as the reason and the tax year, enter the amount, schedule the date. No account setup, no login, no third-party processor charging a fee. The transaction confirms on screen and the IRS sends an email receipt. The check and voucher option using Form 1040 ES still exists if you prefer paper. But Direct Pay is the default for most coaches and most accountants now recommend it as standard. Bookmark the URL on the device you use for tax tasks. Most income tax states want quarterly payments on their own schedule, and most coaches discover this after they've missed one. A handful of states mirror the federal deadlines exactly. Some differ by a week or 2, and some have entirely different periods. The mechanism is usually the State Department of Revenue portal, which is the state-level equivalent of IRS Direct Pay. Module 15.4 covers state filing mechanics in full detail per state. The action item right now is to check your state's quarterly schedule and the portal address, and add the state deadlines to the same calendar where the federal ones live. Don't run the federal calendar in isolation. The best moment to set up all 4 payments for the year is the day your CPA finishes your prior year return. At that moment, you know last year's federal tax number. You can compute the safe harbor amount, last year divided by 4, in 30 seconds. You can log into Direct Pay and schedule all 4 payments for the current year in a single 20-minute session. April 15th, June 15th, September 15th, January 15th of next year. Set them on the deadline dates or a week before. Done for the year. The decision becomes a once-a-year action instead of a 4 times a year scramble, and the cognitive load of remembering each quarter drops to 0. SAM is a composite of the most common year 1 pattern, and the April surprise is the cost that nobody warns about. Full-time coaching, year 1, $85,000 gross, $70,000 net after expenses. Pays nothing quarterly because nobody told him to. April arrives. Federal bill, $15,600. Underpayment penalty, $400 to $600. The penalty is annoying but small. The real cost is the $15,600 check he didn't reserve for on top of the regular monthly bills on a balance that was supposed to be working capital for the practice. The April surprise drains the operational cushion, and the next 3 months of business decisions get made under cash pressure. Sam handled right is the same coach with a 5-minute setup the prior April. End of year 1, the CPA confirms the $15,600 tax bill. Sam's year 2, safe harbor number is 15,600 divided by 4, roughly $3,900 per quarter. He opens Direct Pay the same day, schedules all 4 payments for year 2 on the deadline dates, and the entire quarterly tax problem is solved for the calendar year. 4 payments execute automatically. No underpayment penalty in April. No April surprise. The mental load disappears. The discipline is built once in April and runs itself for the rest of the year. Before you leave this video, open the worksheet and either compute or confirm your next quarterly payment. If you have a prior year return, enter last year's federal tax liability from Form 1040 line 24 into the Safe Harbor tab. Divide by 4. That's your number. If you don't have a prior year return because this is year 1, switch to the 90% of current tab and run your projected income through it. Whichever method fits, open IRS Direct Pay and schedule the next payment now. If you can do all 4 in this session, do all 4. The 30 minutes of setup today removes a recurring decision from the rest of your year.